Ladies and gentlemen, good day and welcome to Datamatics Global Services Limited Q2 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from Christensen IR. Thank you, and over to you.
Thank you, Stanford. Good afternoon, everyone, to all participants in the call today. Welcome to the Q2 FY22 earnings call of Datamatics Global Services Limited. The results and investor presentation have been already mailed to you, and it is also available on our website www.datamatics.com. In case anyone has not received the copy of press release and presentation, please do write to us and we will be happy to send it to you all. To take us through the results today and to answer your questions, we have with us the top management of the company, represented by Mr. Rahul Kanodia, Vice Chairman and CEO, Mr. Sandeep Mantri, Chief Financial Officer, Mr. Mitul Mehta, Senior VP and Head Marketing and Communications. Mr. Rahul will start the call with brief overview of the quarter on business, which will be then followed by financials, which will be given by Mr. Sandeep. We will then open the floor for Q&A session. As usual, I would like to remind you that anything that is said in this call which gives any outlook for future or which can be construed as forward-looking statement must be viewed in conjunction with risk and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual reports, which you can find it on our website. With that said, I now hand over the call to Mr. Rahul. Over to you, sir.
Thanks, Sasha. Welcome and thank you everyone for joining our quarterly Q2 FY22 earnings call. We are glad to have you all on the call today, and I would like to start by wishing you a very happy Diwali in advance. I hope all of you remain safe and healthy through this festive season. I will share with you some business performance highlights, and Sandeep, our CFO, will update you on our financials, and post that we will get into a Q&A. I am glad to inform you all that we are seeing business coming back to normalcy. We are witnessing strong demand environment across segments and industries we operate in. The overall industry is going through a large-scale business transformation, especially in cloud and digitization. We are also very well positioned to capture these opportunities and grow in the coming quarters. Coming to the quarter performance, we reported another strong quarter backed by broad-based revenue growth and robust margin expansion. Our revenues grew by 4.8% on a year-on-year basis and 4% on a quarter-on-quarter basis. However, excluding Signex, which was a subsidiary we divested in Q4 last year, we have grown 24.1% on a year-on-year basis. And despite the headwinds we have from salary increases on the supply side and supply side challenges, we continue to maintain our double-digit EBITDA margin at 16.7%, a growth of 513 basis points on a year-on-year basis. We are seeing significant traction in our BPM business, which contributes 55% of revenues, and it grew at about 25.4% on a year-on-year basis. BPM EBITDA margin was at 23.5%, which is the highest over the last 11 quarters. The growth was aided by new logo acquisition, expansion of business from existing customers, and continuous effort on cost optimization. We are confident of maintaining this margin performance on the back of revenue growth, increased automation, and repricing our services. Our IT revenues, which contribute 45% of our revenues, grew at 8.6% on a quarter-on-quarter basis. The IT EBITDA margin stood at 8.3% for the quarter. However, without considering the investments we are making in products, our EBITDA margin was at 12.1%. We have a very healthy pipeline of orders and are focusing on improving our margins in IT, which will be driven by growth and repricing of our services. Our AFC business has a strong pipeline, and we should see some deals in the next few months. We are continuously focusing on account mining and cross-selling and acquiring new logos. Several of our customers are increasing their wallet share with Datamatics, and we have acquired 33 new logos with several million-dollar deals. As mentioned in our earlier calls, I would like to reiterate the challenges brought by the pandemic have accelerated the client spend and investments in platforms-based digital solutions like digitization, cloud, automation, artificial intelligence, and digital experiences. And this has created huge opportunities for companies like ours. We continue to see large opportunities in digital processing automation and dynamic content management. As you are all aware, we provide BPM and IT services which are driven by good quality talent in the company. This makes our supply and talent situation very important, a very important piece to drive our future growth. The whole IT sector today is going through a challenging time when it comes to people and talent availability. We have taken several steps in stepping up our recruitment activities, particularly increasing the intake of freshers and giving increments to key talent to mitigate the risk of rising attrition and be better prepared for growth. The current situation will put margin pressures on our operations in the coming quarters, but we are mitigating that through repricing our services. I've just returned from a long trip to UK and USA, and the customer mood there is very upbeat. We have increased our focus on the US market and have strengthened the US sales force to focus on digital transformation opportunities, including our intelligent automation products, that is TrueBot in robotics and TrueCap in intelligent document processing. We have recently received excellent ratings by analyst firms operating in the space. Based on this, we remain confident of the market opportunities in intelligent automation as a key driver for growth going forward. I would like to take this opportunity to thank our customers and shareholders for continued support and trust. I would also like to thank all Datamaticians for their dedication shown during this difficult time. We are confident of sustaining a growth momentum and margins for the remaining fiscal year. With that, I will now hand over our call to our CFO, Sandeep Mantri. Sandeep, over to you.
Thank you, Rahul. Welcome, everyone, and thank you for joining us on our Q2 FY22 earnings call. I hope that all of you are safe and healthy. Very warm wishes for the festive season in advance. Let me start with the key financials for Q2 ended on September 30, 2021. So our net revenue for this quarter was at 299.2 crores, up 4% on quarterly basis and up 4.8% on YOY basis. Without Signex, if we talk about revenue, we reported a growth of 24% on YOY basis, and the growth was broad-based across all our business lines and all our verticals and geographies. The ratio of IT and BPM was at 45-55 during this quarter. BPM revenue for the quarter was at 164.6 crores, which is a marginal growth of 0.5% sequentially and 25.4% over last year's same quarter. BPM EBITDA margin was 23.5% for the quarter, which is up 285 basis points, and it is highest over last 11 quarters. IT services revenue for the quarter was at 134.6 crores, which is a growth of 8.6% on a sequential basis and a decline of 12.8% on YOY. But this decline is primarily due to the Signex divestment which we did in Q4 FY21. And if we remove the impact of Signex divestment, then actually we have grown 22.6% on YOY basis. Our IT services EBITDA margin was 8.3%, and as mentioned by Rahul, if we don't consider investment in product, our EBITDA margin for IT was 12.1% for the quarter. Our consolidated EBITDA grew by 51.4% on a YOY basis, while without Signex it was up by 87.9% on a YOY basis. Our consolidated EBITDA margin for the quarter was 16.7% as compared to 14.4% in Q1 of FY22 and 11.5% in Q2 of last year. We were able to maintain and grow this double-digit EBITDA margin primarily due to our continuous focus on cost optimization and automations, and as mentioned by Rahul, along with price increase in some of our customers. This was despite headwind due to increased salary and supply side pressure in our IT business side. As mentioned by Rahul, we have taken several measures to get future ready and avoid any business losses due to the supply side challenges. Overall, industry is facing this issue, and we are not different for this situation. However, we are confident of maintaining double-digit EBITDA margin for the rest of the fiscal year. We talk about PAT, which is after non-controlling interest. PAT stood at rupees 35.3 crores, which is a decline of 10.8% on quarterly basis and a growth of 129% on YOY basis. Without Signet, our PAT grew by 171.5% on YOY basis. However, the QOQ drop of 10.8% is due to the impact of exceptional item, which is on account of one-time exchange gain of rupees 10.2 crores, arising from buyback of equity capital and redemption of preferential capital held in one of our overseas subsidiaries in Q1 FY22. If we remove this one-time gain, then on a QOQ basis, we would have grown 20% in terms of PAT. Diluted EPS for the quarter was 5.99 per share, which is higher than last year same period, which was at 2.62 per share. Now coming to half-yearly result, our revenue was at 586.9 crores, a growth of 4.3% on YOY basis. Our EBITDA was at 91.3 crores, which is a growth of 48.4% on YOY basis. EBITDA margin for H1 FY22 was 15.6% as compared to 10.9% in last year H1, which is a 462 basis point growth from the previous year margin. The growth is primarily driven by our disciplined execution and cost optimization measures. Our PBT before exceptional item stood at 82.8 crores, a growth of 93.9%. However, PBT after including exceptional item on account of one-time exchange gain of rupees 10.2 crores, we were at, in overseas subsidiary, we was at 93 crore as compared to 42.7 crore in H1 FY22. Our EPS is at 12.7 per share as compared to 4.9 rupees per share in the last year same period. This is H2. Now, when we talk about balance sheet, we continue to remain healthy. As on September 30, 2021, our total cash and cash equivalent plus liquid investment net of debt stood at rupees 341 crores. Our free cash flow to PAT ratio was at 135%. Our DSO was at 65 days in as of September. We continue to remain cautious on the pandemic situation and are confident of combating challenges and maintaining growth momentum. In terms of our geographical footprint, the US comprises 55% of our business, while India is 26%, UK and Europe is 15%, and the rest of the world is 4%. I would like to bring to your notice that from this quarter we have started reporting our revenue by industry in a more detailed manner. So in terms of industry footprint, BFSI continues to remain largest segment for us, which is 30% of our revenue. Education and publishing is 23%. Technology and consulting sector is giving 20%. Manufacturing, infra and logistics is 10%. Retail is 6%. And not-for-profit or government organization is giving 7% of business. Rest others are in others, which is about 4% of our total revenue. Our client concentration remains healthy, with top 5 clients contributing about 27%, top 10 at 39%, and top 20 contributing at 52%. We added 33 new clients in this quarter. Our total headcount for the quarter was 10,548, and our annualized attrition was at about 27%. So these were basically financial summary for the quarter. With this, I will now pass on the call to operator to open the floor for Q&A. Thank you very much for your patience, and I appreciate your continued interest in Datamatics. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Ravi Gupta, an individual investor. Please go ahead.
Thank you for giving me the opportunity. So I can see that we have a cash of around 341 odd crores. So how are you planning to utilize this same? Any plans for any acquisition or anything?
There are two areas of in deploying this cash. One is we are looking at some acquisitions. Nothing in a very mature stage, but we are in dialogue with a few companies. And the second is that we are investing more on the intelligent automation product suite that we have, which is TrueBot and TrueGap, and we need to take that to market more aggressively. So that's where these are the two areas where we consume some of the cash reserves that we have.
Okay, so would it be also fair to assume that there can be some possibility for dividends or buyback, or everything is going to go into acquisition, something like that?
Well, whatever dividends buyback we've explored, and that does not make too much sense from a tax point of view. It's not the most efficient structure. There were some loopholes that the government has plugged, so I don't think buyback makes sense. Dividend we will explore as the year passes and the board takes decisions. Then we'll of course come back to the shareholders. So we'll come to dividends when we come to the end of the year and see how the performance is.
Fair enough. There's one more question that I had regarding to what I can see that attrition being quite high at around say 27%. So are we taking any steps to tackle this particular?
Annualized rate. This is not
the attrition is 27% is annualized, which is of course high, but is not as high. Some of the industry players are having much higher attrition than that. Having said that, as I mentioned in my address, that we are proactively recruiting very aggressively to offset the impact of attrition. We have key people we are looking at giving increments to retain them, and then we are repricing some of our services to our customers that will offset the increase in cost that we may have. Having said that, yes, it will put pressure on the system, and it is doing that. But I think we will be able to manage the attrition issues reasonably well.
Fine. Thanks a lot for taking my question. That was it from my side.
Thank you, Mr. Gupta.
Thank you. Participants who would like to ask questions, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. Participants who would like to ask questions, please press star, then 1.
We should have some time.
Anyone who wishes to ask questions, please
sure.
press star, then 1.
So I guess by and large the analyst community must be quite happy with the results we've declared. So therefore they may not have too many questions. But anyway, I think if there are no questions, then we can conclude the call shortly. Although we are happy to field any further questions, I'm sure we'll continue to show some good performance in the next few quarters.
I'll check for the questions.
Yeah.
Participants who would like to ask questions, please press star, then 1.
Great. Should we conclude the call?
Sure, sir. There's nobody in queue.
Sure. Gentlemen and ladies, thank you very much for being on the call. And it was a pleasure talking to you and wishing you a very happy Diwali again in advance. And best wishes to everyone.
Thank you very much, sir. Ladies and gentlemen, on behalf of Datamatics Global Services Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect.